All right, welcome back to the deep dive. You've given us the sources, and our job, as always, is to cut through the noise and get right to what matters.
And today, we're jumping into a really interesting one, a project that, sits right at that intersection of big corporate finance and next-gen crypto tech.
We're talking about Hedera Hashgraph and its token, HBAR.
Exactly.
So our goal for this deep dive is, I think, threefold. We need to get past the marketing and really understand the Hashgraph itself, then look at the corporate adoption it's getting, which is pretty staggering.
Mm-hmm.
And finally, we have to tackle the price predictions for 2030. They are all over the place. We're going to figure out what it would actually take for HBR to hit something like $10.
And we've pulled together a great stack of reports for this. We have everything from, the really deep technical analyses to the more speculative forecasts from places like Captain Altcoin, Bitget, and Dailycoin.
So a real mix.
A real mix. But the consensus seems to be that HBAR isn't just another crypto. It's more like a bet on who wins the race to build the infrastructure for enterprise.
That sets the stage perfectly. So let's start with that technology, because if you treat Hedera like just another blockchain, you're missing the whole story.
You're missing everything. It's not sequential like Bitcoin. It's not a chain of blocks. It's powered by Hashgraph, which is a totally different type of distributed ledger technology. A DAG.
A directed acyclic graph.
Right. And what's fascinating is that the algorithm itself, it was developed and patented by an American mathematician, Lehman Baird.
Patented. That's not something you hear often in the crypto space.
Almost never. And it tells you from the get-go that this was built with institutions and compliance in mind, not, just for the open source community.
Okay, so if the tech is that different, how does it actually work? How does it get its speed?
Well, the architecture is key. Think of a blockchain like everyone waiting in a single file line to agree on what happened. It's slow.
One block at a time.
One at a time. Hashgraph is more like everyone is in a room chatting at once. They use this process, they call it gossip about gossip and virtual voting, to all agree on the order of events almost instantly.
So no waiting in line. What does that translate to in terms of actual performance, compared to the big guys?
The numbers are pretty stark, and this is why the enterprises are paying attention. Hedera is claiming over 10,000 transactions per second.
10,000.
And with finality, that's the point where a transaction is permanent in just 3 to 5 seconds.
And if you put that next to, say, Ethereum?
Well, Ethereum does maybe 15 to 45 transactions per second, and Bitcoin is down around 7. So it's a completely different league. This is internet scale speed.
And all that speed is backed by a high level of security, right?
Precisely. It uses something called asynchronous Byzantine fault tolerance, or ABFT.
Right.
Analysts say that's the highest theoretical level of security you can get for these kinds of systems.
Which, for a bank, means they know the network isn't going to get corrupted or delayed.
It guarantees certainty. And it also tackles that big ESG issue that gives corporations pause. Energy use.
Right, the environmental angle.
Absolutely. Because the consensus is so efficient, Hedera is actually carbon negative. The sources really stress that. For a company trying to meet ESG goals, that's not a bonus, it's a hard requirement.
Okay, so we have speed, top-tier security, and it's green. But for this engine to run, it needs fuel. Where does the HBAR token fit in?
HBAR is the fuel. It's the utility token you use to pay the tiny fees for everything you do on the network transactions, smart contracts, all of it. And you also stake it to help secure the network.
So no HBAR, no utility.
Simple as that.
Okay, let's pivot from the tech to the structure around it. This is where Hedera, again, just goes in a totally different direction. I'm talking about the governing council.
That council is probably its single most defining feature. It's not some loose group of developers. It's a formal body of up to 39 global organizations.
And these are, they're global heavyweights. The sources list Google, IBM, Boeing, LG, Deutsche Telekom.
Huge names. It gives them a level of institutional credibility that most projects just don't have.
Okay, let me push back on that, though. That sounds great for getting corporate clients, but doesn't having Google and IBM in charge completely contradict the whole point of decentralization?
That is the core tension of the whole model, and the sources are clear about it. But for the enterprise user, that council is a feature, not a flaw.
How so?
A company like Boeing needs to know the network isn't going to suddenly fork or change its rules because of an anonymous community vote. The council guarantees stability. It guarantees regulatory compliance. For them, that predictability is more important than, say, pure decentralization.
They're choosing business continuity over crypto anarchy. Makes sense. And that credibility is clearly translating into some massive real-world use.
Exactly. I mean, let's look at the actual use cases. Real-world asset tokenization, RWA, is a huge one. One report says over $5 billion in commercial real estate has already been tokenized on Hedera.
$5 billion already. That's not a pilot project. That's a full-on implementation.
It is. But a lot of it is that, unglamorous back-end integration. It's not about hype. You also have firms like Arcax using it for tokenized securities, money market funds. They're even bringing in Lloyd's of London for collateral.
So really deep financial plumbing. And we're also seeing major stablecoins, right?
Yep. USDC is there, the Australian dollar stablecoin, AUDD. Plus, you've got major banks like Shinhan and Standard Bank piloting cross-border payments on it.
Okay, but the sources mention something even more futuristic. Hedera's role with artificial intelligence.
Yeah, now this is where it gets really interesting. It's being positioned as the potential audit layer for AI.
The AI audit layer. Break that down for me. Why does an AI need a ledger?
Well, think of it like a black box flight recorder for every single decision an AI makes. As AI agents get more autonomous, regulators are going to demand accountability.
Right. You need to know why it made a certain decision.
Exactly. Hedera is used to create a permanent, unchangeable log of the AI's choices. The sources talk about tying this verifiable data to hardware, like the new NVIDIA Blackwell chips and Intel hardware.
So if regulators ask why an AI denied a loan, you have a mathematically proven, tamper-proof record of its logic.
Precisely. It solves a colossal compliance problem and turns Hedera into the trust layer for the entire AI economy. It's a huge potential use case.
All right, let's shift gears to the question that drives so much of the market, the price. Hedera hit its all-time high back in 2021 at around 57 cents.
Right.
As of the data we're looking at from early 2026, it's hovering around 12 to 13 cents. So a big drop, but the long-term optimism is just staggering.
The range of predictions for 2030 is expansive, to put it mildly.
Yeah.
You have the really conservative end, maybe 70 cents to $1.35.
Okay, so a decent return from here.
Then you get the moderate forecasts around $1.70 to $2.20 based on more enterprise adoption.
But then there are the really wild ones. I saw $5, $11, even up to $30 in some reports. That's a gargantuan leap from where it is now.
It is.
Let's crunch the critical math on that. What would the market have to look like for HBAR to actually hit, say, $10?
Okay, so you have to look at the market cap. HBAR have a max supply of 50 billion tokens. For it to hit $10, its market capitalization would need to reach somewhere around $500 billion.
$500 billion. Let's put that number in context for everyone listening, because that's a massive figure.
It's a crucial point. A $500 billion valuation would put HBAR in the top 3 cryptocurrencies globally. It would be rivaling or even surpassing the value of something like Ethereum today.
Or outside of crypto.
It would put it in the same league as a global financial giant like MasterCard.
For HBR to hit $10, it can't just be a successful crypto project. The sources are basically saying it has to become the fundamental infrastructure for a global financial processor.
Exactly. It requires a true paradigm shift. This isn't about retail speculation. It implies trillions of dollars of real-world assets, real estate, energy, everything, are tokenized on Hedera. And it becomes the verified trust layer for the global economy.
So what does this all mean? Let's talk about the key catalysts the bulls are pointing to. What gets it there?
First and foremost is institutional access. The launch of regulated products like the Valor Hedera ETP in Germany, and talk about a spot HBAR ETF. These are compliant ways for big money to get exposure.
So opening the floodgates for traditional finance.
Right. Second is government buy-in. Its involvement in things like Australia's CBDC pilot is a huge signal of trust and capability at a national level.
And then there are just the macro trends, the broader market.
Of course, HBR will benefit from the next big crypto bull run, but the key difference is that the capital flowing into HBR would be looking specifically for utility and compliance, which is Hedera's home turf.
That's a powerful bull case. But we have to look at the other side. What are the big risks? What could stop this from happening?
Well, there are very real risks. First is just intense competition. You have Ethereum, you have Solana. Everybody is fighting for that same enterprise business.
And that enterprise world moves at a snail's pace, doesn't it?
That's the second big one. Execution risk. These corporate integrations take years. If that mass adoption everyone is hoping for takes too long to materialize, say it doesn't really hit scale until 2035, That could crush near-term price potential.
And we also have to consider the token supply itself, right?
Yes, the supply dynamics. There's a capped supply of 50 billion tokens, but there's still scheduled releases from the Treasury. That creates a steady selling pressure that has to be absorbed by new demand.
So this deep dive really shows that HBAR is moving out of that unglamorous integration phase.
That's a great way to put it. It's done the hard, slow work of building the council and the tech. Now it's all about proving that it can scale into real global utility.
The core tension seems to be that it has the superior tech and the corporate credentials.
But the price potential depends entirely on converting those pilots into dominant global transaction volume. It has to go from having the best resume to having the biggest footprint.
And right now, the sources show its price is still highly correlated with Bitcoin. It moves when the speculative market moves.
Exactly. But the journey to $10 means it has to break that correlation. It needs to stop being just a higher beta crypto and start being valued independently as a piece of global infrastructure. It has to earn a MasterCard valuation with MasterCard level volume.
So final thought for you, the listener, to chew on.
Given that Hedera's whole story is about enterprise utility, what verifiable on-chain metric do you think is the best indicator of its true value? Is it the daily transaction count, the total value of all the tokenized real estate, or something else entirely? What number tells you it's really winning, separate from the speculative price on an exchange?
Something to really think about. Is the plumbing translating into actual velocity? That's all the time we have for this deep dive. Join us next time as we continue to cut through the noise.